How much do you need to retire comfortably? If you've asked yourself this question, you've probably seen an answer. Maybe it was 1 million, maybe it was 2 million, maybe someone told you that you need 70% of your pre-retirement income. But what if those numbers are completely wrong for your situation? I build retirement income plans for Canadians every single day. And the biggest mistake I see people making is chasing these generic targets that have nothing to do with their actual circumstances. Because if you get this wrong, two things can happen. You can retire too early without enough and risk running out of money in your 70s or 80s, or you work longer than necessary and miss out on the most healthiest active parts of your retirement. So in this video, I'm going to walk you through why the old rules don't work anymore and how to calculate how much you actually need for retirement. Before we dive into the actual numbers, there's something that we need to clear up first, because chances are you're asking yourself the wrong question. Many Canadians think retirement is just about hitting this magic number. Maybe it's 1 million, 2 million, or whatever the latest headline says you need. If you don't have that number, you start to panic, and if you do have it, you just think that you're fine. But those numbers are completely meaningless without context. Because the truth is, your retirement number isn't some one-size-fits-all figure pulled from a finance blog. It's personal, and it depends on three things. How much are you actually spending? What other sources of income do you have? And how is your portfolio structured? Someone with $800,000 might retire comfortably at 60, whereas someone else with $2 million might struggle to retire at 65. It all comes down to the math behind your situation. And that's exactly what we're going to break down today. And by the end of this video, you'll be able to calculate your actual number. Most people look at their total savings and think, is this enough? But they're missing two critical pieces of the puzzle: their spending and their other income sources. Your retirement number is going to be based on three inputs. The first is your lifestyle spending. Do you need $60,000 a year to live or $120,000? Because the difference between these numbers will drastically change how much you need to have saved. And no, you don't need to automatically target 70% of your pre-retirement income. That's another rule of thumb that falls apart. What you need to focus on is how much you actually want to spend in retirement. The second thing you need to look at is your portfolio size and structure. It's not just about how much you have, it's about where it's held. Is it in an RSP, a TFSA, or a non-registered account? Because each of those accounts gets taxed differently when you take money out, so that's going to change how much you need to withdraw. The third thing you need to look at is your income sources. So this includes things like CPP, old age security, if you have a work pension or rental income. Because the more money that you have coming in guaranteed every month, the less you need to rely on your portfolio to make up the difference. So before you go and assume a specific dollar amount that you need, map out these three things. Write down what your actual spending is going to be, write down all of your other income sources outside of your portfolio, and then write out which accounts your portfolio is actually held in. With these three inputs, you can then figure out how much you actually need to have saved. And if you need help with this, then check out our free retirement toolkit in the description below. It includes many resources, including guides and checklists, to help you figure out what you need for retirement. Let me show you exactly what this looks like in practice. Most people think that retirement planning is theoretical, just abstract numbers on a spreadsheet. But when you run the math for a real couple, the picture becomes crystal clear. Let's say we have a couple who are both 65 today with 1.5 million, and they'd like to retire right away and be able to spend $80,000 per year. Can they do it? Well, here's what we look at. They currently have 900,000 in their RSPs, 400,000 in their tax-free savings account, and 200,000 in their non-registered accounts. As we know, RSP withdrawals are going to be fully taxable, whereas withdrawals from their tax-free savings account are not going to incur any tax. They both have CPP coming in at about $15,000 per year, and they're also going to start their old age security and receive about $8,500 per month. So their baseline income for the both of them is going to be $23,500. So combined, they have $47,000 a year coming in. Now, they want to spend $80,000, and to make this look as bad as possible, let's say that they make up the difference from their RSPs, so that's going to be fully taxable. So to be able to spend $80,000, they're going to need a higher income because on the RSPs, we're going to have to hold some tax. So using Manitoban federal rates, we're going to have to target $97,000 in taxable income. So we're going to have to draw $25,000 each, or $50,000 total from their RSPs to net out the $80,000 that they want to spend. Now, they're withdrawing $50,000 out of a $1.5 million portfolio. That's a 3.33% withdrawal rate, well within safe limits, especially if we're using a balanced portfolio. So they can retire today and their money is likely going to outlast them. Now, there's one more thing that you need to consider when planning out your retirement expenses. Most people assume that they're going to spend the same amount of money throughout their retirement, again, adjusting for inflation along the way. But the reality is that most people spend more at the beginning of retirement and spend less on the back end. We typically call this the go-go, the slow-go, and the no-go phase. So in the go-go phase, this is where you're spending more money because you're presumably at your healthiest and most active. So for the couple we just looked at, instead of targeting $80,000 a year in expenses, maybe they target $100,000 per year. And then we hit the slow go stage. So this is probably in your 70s or early 80s, and you're probably not traveling as much, and you've done a lot of things that you wanted to do in retirement. So you don't need to have as much expenses. So again, maybe for the couple that we looked at, maybe their expenses go down to $70,000 a year at this point. And then finally, we hit the no-go stage where people really aren't spending a lot of money assuming that they're healthy. So we can assume even lower expenses. Now, we have to be careful here because we do still want to keep a good buffer in case we need that money for any health reasons. The point is, your retirement number doesn't have to support peak spending for 30 years. You can plan for flexibility, spending more at the beginning and adjusting as you move forward. And this brings us back to the question everyone actually wants answered. How much do you need? People want a single number. They want me to say, you need 1.2 million to retire so they can check off a box and stop worrying about it. But your number is unique to your spending, your tax situation, and your goals. If you're spending $60,000 per year and you have $40,000 coming in from CPP and OAS, you might only need $500,000 saved for retirement. On the other hand, if you want to spend $120,000 per year and you have no pensions at all, well, you might need $3 million saved. The point is that the right number for you depends on the three inputs we covered. How much do you want to spend? What other sources of income are you going to have? And how is your portfolio structured? So let's stop chasing headline numbers and figure out the actual math behind your situation. Now, if you don't feel like doing this yourself and you don't have the time or the energy, then check out our Atlas system in the description. This is the exact process we follow with clients to answer questions just like this one. But even if you have enough saved, it doesn't matter if you don't know how to turn it into an efficient income. That's where the real strategy comes in, because retiring on $10,000 per month requires more than just a large portfolio. It requires the right withdrawal strategy to protect your wealth for decades. And that's exactly what we break down in this next video. Go check it out now.